following portion of Money Matters is sponsored by Yeisley Financial Group.
Hi everybody, welcome back here on Good Day Kansas. We are once again here at Yeisley Financial Group for our Money Matters segment. Nicest people here, I would say some of the smartest as well, certainly when it comes to your money. We have Randy with us, the founder of Yeisley Financial Group. Great to see you, Randy.
Yeah, always good to see you, Avery.
Yeah, so last week we kind of talked about ways that maybe you can pay less in taxes. We know you can't totally get around that, but some different ways. And now we're going to talk about 5 types of taxes and some more ways about being able to do that.
Yeah, so last time we talked about, 3 types of money, but there's 5 ways to tax it, so to speak. We're all overtaxed, you pay taxes on your income, you pay sales tax, you pay property tax. It's just tax on tax on tax. And so it is a good question that people have. How do I minimize the taxes? So there's obvious taxes like ordinary income tax. So you're going to be taxed on the ordinary tax table at tax time for your earnings. Then on your investment accounts, there can be capital gains tax. Short term is less than 12 months, so it's taxed at the ordinary income tax rate. Over 12 months that you've held that position, it's taxed at the capital gains rate. You may or may not owe capital gains tax. If you make less than, I think his number is around $96,000 a year, your capital gains bracket is 0. And then from 96 to 600,000, you're in the 15% bracket. Only if you're above $600,000 are you going to be in the 20% bracket. But even the 20% bracket is lower than most of the other ordinary income brackets. So you have capital gains tax. There's also the net investment income tax. So for people who are high wage earners or they have a lot of income from investments, there's a surcharge. It's a 3.8% surcharge on those investment earnings. So you may or may not have to deal with that. The one thing, we talked about Roth conversions here a while back. I think that one of the stealth taxes is what we call IRMA. It affects how much you pay in premiums for your Medicare Part B and Part D plans. If you make more than, I think the number is $212,000 a year, you now have to pay a higher premium for that. And so there's a table that tells you that. Well, if you're doing Roth conversions, maybe you're in the 22% tax bracket and you want to do Roth conversions as quickly as you can so that you get the benefit of doing so. But if that kicks you up into the higher tax brackets because it raises your income for that year, it also raises your income for the IRMA. And so you need to be aware of that because we have a lot of clients that are high wage earners and they're paying hundreds of dollars more each month per person for their Medicare Part B, and so you have to be mindful of that IRMA. It's kind of a stealth tax.
Yeah, for me, the more I come in here to learn, the more I realize I don't know much about this, and I need to get a financial advisor, just like Randy. I know, I do too. Randy Yeisley here at Yeisley Financial Group. How can our viewers get a hold of you?
It's really simple. Just give our office a call. The phone number here is 719-2900, or you can go to our website, yeisleyfinancial.com. We'll get in contact with you, find an appointment time slot that works for you and us, and be happy to sit down and have a conversation. Just see if we're a good fit or not.
Whether it's savings, taxes, or so much more when it comes to finances, Randy and his team would love to help you guys out. Thanks for being with us again. We appreciate it. We have more on Good Day Kansas coming up next.
The preceding portion of Money Matters is sponsored by Yeisley Financial Group, a name you can trust.